What are the ways to invest early in a company if it's not publicly traded? That's a great question. Yeah. So you can invest in venture capital firms if you want to. I would only invest in the top 10 venture capital firms on the planet because I think they get all the great deals and everybody else fights for the scraps. And in some places in the world, you have to have a certain net worth, liquid net worth, to be able to invest in illiquid stocks like venture capital investments. And you have to fill out what are called subscription documents to make sure that you have that minimum net worth aside from your house or your apartment. And governments regulate the market sometimes this way on purpose. And I think it's a good thing because they don't want average people to lose their shirt or be stuck in a relatively illiquid investment for many, many years. Every country is different. Now, if you wanted to invest in a private company, but not through a venture capital firm, you can invest directly in startups. And usually the first round is called the seed round. And in the seed round, it's usually a high net worth person that invests. And then after the seed round, if things take off and that little seed starts growing to a bigger plant and eventually a tree by IPO, but when it starts growing to a little plant, then venture capital firms come in and invest 1 year doing the A round, then the B round, then the C round, and then hopefully IPO one day. So the best bet is to get involved in the seed round. Do not invest money that you can't afford to lose, please. And just understand that you're probably not going to see that money for at least 10 years. So you're going to be a stockholder, very long-term focused. And make sure, most importantly, that you're given an investor memorandum, okay, or a legal document prepared by a lawyer that you can read and go through and understand all the risks in terms of dilution, etc. And are you getting common or preferred shares? Let me explain what that means. So there are different classes of investments. There's debt, and I'll just discuss two others. There's debt, like bonds or loans, whatever. Then there's preferred shares and then common shares. If a company goes bankrupt, the person to get their money back first, meaning the person with the most senior claim, is the debt holder. They always get their money back first. Then comes the preferred shareholders, meaning people that own equity in the company. It's called preferred shares. Think of the word, they get preferential treatment. Then the lowest of the low is common shares. They're the ones that get their money back last. And when you invest in the stock market, you're actually, for the most part, buying common shares. But just understand going in what kind of shares you own, preferred or common. Hopefully it's preferred so you don't get as diluted in future rounds. And if it's a large amount of money you're considering investing in a startup, what I want you to do is I want you to get the investment memorandum and hire a lawyer to take a look at it. Okay. And you can go to legalzoom.com. I'm not affiliated with them or any company, but it's a way to get access to talking to lawyers for only $15 per half hour. They speak really slowly though, or no more dad humor, I'm sorry. And I also want you to get a lawyer to look at it and your accountant as well. And your accountant might convince you not to do it. And if you don't have an accountant, please get one. And if you don't know how to get one, ask your parents or your successful friends, aunts, uncles, whatever it is, for an accountant, because they will help you stay within the law. Usually, hopefully, if they're a good accounting firm, of course. And they'll also tell you whether or not investing in something makes sense or not, or if you can put it in your retirement savings account, etc. The last thing I'll say about that is, please don't ever invest in your friends' companies. Don't do it. I've made my friends a lot of money, but I have one particular friend who actually lost some money in a deal, and he turned into not the nicest person. Keep it separate. Keep it separate always if you can, please. People change when it comes to money sometimes.